Hello and welcome to the Secrets of the Money Masters, where today, after COVID-19 has hit us, we're taking a look at what's happened to Kate and Tony, and I'm getting my expert, Orbis Investments Managing Director Jenny Josling, to have a look and see what she thinks of their financial situation. Interesting times, Jenny.
Incredible times. Yeah, you couldn't believe that we'd be having this conversation.
No, we couldn't. Okay, let's take a look.
Kate and Tony, so good to see you again. It's been a very eventful few months since we filmed last November, and we've gone through bushfires and a pandemic since, so none of us expected any of that. How are you both?
Who would have thought, hey Vanessa, who would have thought that we had that ahead of us? Well, we are both going well. The kids are going well. We are very fortunate to work from home anyway, so as far as having to create office space at home and try and navigate having your kids study from home, we actually have done that quite well. I do think that, yes, we've had to make some financial adjustments. And Tony, you talk about work for you, what's happened with work.
Yeah, so we've enjoyed seeing the planet slow down, but financially, my income has stopped. I've applied for JobKeeper, which has been a real godsend from the government, and very generous to have that available across all the country. So without that, I don't know if I would have got there.
So when JobKeeper ends in October, September, I think it's October, do you feel like your business will be back to normal then, or you just don't know yet?
No, I don't think so. The hit that we've taken financially, which came in with the pandemic, slowed down and then stopped, and then I had to refund, and we've got savings which we're about to start dipping into. JobSaver, JobKeeper isn't enough money to that we require. It's good, but it's certainly not enough. And so I think we'll feel the effects of this right through to the end of the year once we start having to go into our savings and keep hustling for work. And by then it's the end of the year and things slow down anyway. Yeah.
And how are you feeling about it, Kate?
I feel that there's this false sense of security that because we've been drip feeding that we'll be okay, but you just don't know how long it's going to go on for. So for me, it's trying to be mindful about not feeling too safe, not feeling like we can just, overcommit ourselves financially. We're being very cautious. We've had a renovation plan for a while on the kitchen, and we're doing it mindfully. But I know that for us, it's like, when is this going to end? It's going to be a long time and a long recovery. So I think it's being mindful financially, what you spend and where you spend and what you're doing.
And tell me about the investment properties, because you guys own your own home. We knew that, and that's lucky. And you've got an investment. How many? 3 investment properties, don't you?
There's 4. So there's a 2 dual occupancies and the two apartments. Vanessa, when this thing happened, what I did was I proactively called our insurance broker, and I don't know whether everybody sees the value of a broker. We do, because someone is overseeing everything. I've always said that it's worth having a person you can talk to, not a number when you've got a broker. So I called my broker, and he just gave me a rundown on how the insurance was going to work. And really, the bottom line is that they won't. They won't actually cover you until you get rid of your tenants. So early on, I focused on the young family who I have 2 young kids, and I thought to myself, there's no way I could put them on the street to then get the $12,000 that was going to cover my rent and my mortgage. So, that was a big decision, because at the end of the day, we would be able to buffer it if we needed to for these people because we cared. But unfortunately, that hasn't had to happen for us. We have had our property management group come to us and request that we discount the rent for one particular couple that I never thought would have an issue. And we've just gone back and said no, because we knew that they were getting job seeker. We knew that they were going to be okay. and they were probably just asking the question just to test the water. And so far, we've been okay with our 4 properties. Although one single the apartment have actually just broken their lease.
It is a concern though, because we've been approached by a number of tenants to reduce the rent, which if we reduce the rent to them and my wage is drastically reduced, then we're squeezed.
It's your problem then, not theirs.
It's my problem. And at the beginning of this pandemic, there was certainly it certainly seemed to be policies in favour of the tenant, not the landlord.
It's all a learning curve for all of us. We've never had to go through this before. So it's about just stepping back and taking a deep breath and working out what you need to do. But communicate, talk to people.
Tony, I remember last time we spoke, you sort of said, we'd be open to a financial planner and diversifying and taking advice on our super and investments. How do you feel now?
It's even more important. We have all of our eggs in the one basket. We've developed a strategy around property because that's my upbringing, that's my experience, and that's the only reason. It's not by choice, it's by experience. That keeps me up at night. Having the pandemic hit, when you've got a property-only strategy, it can all go. We can lose it all by virtue of not being able to maintain the repayments, by not having tenants, by not having other sources of income, by not properly planning our super money. So, it's a strategy that's great when times are good, but who would have thought a pandemic was coming? We would welcome other opinions and advice. We need to have that buffer that Kate spoke about, and we need to reach outside of our experience to rely upon the expertise of others to see what else we can do and how we can, increase that buffer and protect that buffer should anything, God forbid, happen again.
Well, thank you both for being so honest, and I guess a lot of people are going to watch this and be quite inspired by you two, so thank you very much for being part of it.
Thanks, Vanessa, for the opportunity. Thank you.
Well, a lot's happened in 5 months for Kate and Tony since we first filmed. What did you think? Did you expect to see that?
Not at all. I actually had goosebumps through part of that because it's all become quite philosophical. Talking about life slowing down. I mean, there's a lot of finance implications to talk about here, but this sort of global meditation that we're having about, we've got economic hardships to deal with, but we've all slowed down, and there's an element of people that enjoy that. So it's just interesting, watching those aspects. And Kate, who's had cancer, so just has this really good grounding in life and such a good perspective on this stuff. So,
she does. She has got a really wise perspective, but I mean, something she said resonated with me is she doesn't want to get too comfortable, and Tony's never going to let that happen.
No.
Tony's the guy who's, wanting to make sure it's all good and keeping a pretty tight hand on the reins. But, they do have investment properties. They're not what you'd call struggling in that sense. They have 4 investment properties, but liquidity's been an issue in this, and Tony acknowledged that.
Yeah, I mean, this is an incredible case study which you would never think would unfold so quickly before our eyes, through the course of this show.
Yeah.
So it sounded like a good, solid investment strategy, and there's elements of it which still are, clearly. But, having come through a crisis like the pandemic crisis, but then the economic implications of that, where suddenly this asset that you've got, it's not liquid. As Kate says, they probably can't sell those properties now, and they could go into a negative equity situation where, they may have more debt on some of those properties than they're actually worth, which hasn't happened in Australia. I lived in the UK in the 90s and I saw it there, so I've always been very conscious of it. And watching them originally, or, working with them originally, you can see the possibility of that. And some of those things are unfolding. So a lot of concentrated assets in one pool.
Yeah, and look, Aussies love their property, right?
Of course,
we all do, and you would
Yeah.
think, they're a success story for investment properties. But as Tony sort of pointed out, they don't pay me There's, it isn't on the landlord. Kate didn't want to kick a young family out of her property, and suddenly there's all these emotional measures around what is essentially an investment.
Yeah, look, you could never have foreseen this element of it. I mean, negative equity can happen just when there's pressure on the property market, but
Meaning
for what's
you
happening
borrowed
now,
a lot and then the house price was high, and now, they haven't tanked that much, house prices. Do you think they'll go down more again? Oh, no, you're not.
So prices have already come off a little bit, particularly in Sydney and Melbourne. But I think Kate's nailed it when she said, I'm not sure we could sell these properties. There's not a lot of buyers out there in this market, and that's a pure supply and demand equation, right? But I think the other pressure is actually people not being able to pay their rent. And then dealing with, I've got friends in real estate, and they might have 40 clients on their books, 40 people who are renting. They've all contacted that agent to see if they can get a break on their rent. Some of them are still working. And I think that's what Kate and Tony have been faced with. There's this pressure of everyone's trying to see, where they can
lower their overheads.
Yeah, lower their overheads, make ends meet. And it's another aspect of owning property that you have to deal with.
Mm. Yeah. Well, I know they said that they've had savings and Tony's income's gone down. So, he's on JobKeeper and that's been extended. So that's good. But that's not near the cash flow they need. They'll start to cut into savings. What options, if they're not going to sell a property and they're using their savings, when do you get to a point where you have to pull the lever because you can't spend air, you can't go into credit card debt to live, or, what do they do?
It's tough. It's the story that a lot of Australians are facing as, today at this very point. It sounds like they have got some savings they can tap into. So in either a business or a household, I've talked a lot about working capital in a business, which is just having some cash there for an unforeseen event. And in a household, it's incredibly important. It sounds like they've got that. We're lucky to live in Australia where the government support has been incredible.
It has been.
And it sounds like that will be extended. So it will probably tide them over. I think, and look, they say it, in the interview, I think it's made them think harder about their investment strategy and perhaps having a few other asset classes in there as you go through a crisis. And look, these things, they don't happen every year, but when they come, they can really hurt. And again,
this hasn't happened ever.
No,
in our lifetime.
No, but the markets have gone down significantly before. So in an economic sense, there's been different parts of the market have had strain on them before, but not this sort of perfect storm that they're dealing with and we're dealing with now.
Do you think, you invest global equities, so shares from around the world at Orbis?
Sure.
Do you think, that's something Tony said he didn't understand, and Kate, they didn't have any exposure to. Do you think if they would have, it might have cushioned this? They could have drawn down on their stocks, or would they have fallen too? Talk to me about that.
Yeah, look, it's we're filming now and these shows often go to air a bit later, so I'm always cautious about what to say because the market's so volatile. But look, the markets from the 12th of Feb, which was sort of known as the peak now, to when markets came off, global equities went down about 23%. Australian equities went down about 36%. And then they've rebounded since then. So Australian equities went down further than global, but they've bounced back about 23%, so higher. Okay. Global equities have come back about 12%. So year to date, the numbers actually don't look that bad. But I think if they had exposure to other asset classes, and I suspect they may have through some of their super money, if they're in one of the big funds, they have very good balanced funds.
Remember, they've got the SMSF.
Yeah, okay.
They didn't really know what to do
That's
with
right.
because an accountant had let Tony set
so
that up. So I don't think they do have much exposure.
So
to
the
be honest.
SMSF is probably where they've got some of their property. Exposure.
I think it is. That's probably what's been done, and they don't really understand that structure well enough to say that's why we've done it. But look, they're very open to advice. So obviously they need it.
Yeah, and I think they've had that lesson. It's an incredible lesson for other people to see. It's just having your eggs spread. It sounds so simple to not put all your eggs in one basket.
But you kind of think multiple properties isn't putting your eggs in one basket, different locations. But at the end of the day, it's still property.
It's one asset class at the end of the day, and it will behave the same way in a crisis. So bonds went up, 16, 17% as the market crashed so severely. So there's a comfort that Kate and Tony would have got from having that diversification and possibly, needing to, if they did need to liquidate some assets across those classes, they'd have a bit more choice as to what they could do. And they wouldn't have had, there's no tenants in your global or Aussie equity portfolio calling you asking for a rent break. So I realise there's some...
That's good.
There is benefits to different types of investments and how you interact with those investments as well. So.
Well, we've always done this show for education. You've always supported educating the market at Orbis, and thanks for that. You've been a very early supporter of this program and all the educational content we've done. I'd love to see Kate and Tony get through this and thrive, and we'll match them with some advisors and see what happens. But yeah, uncertain times for us all. I guess we've all just got to look forward and weigh the best we can and conserve as much money as we can so that we can continue.
Yeah, look, at this is just, the whole experience has been educational. I mean, this show's going to really bring it to light. We've talked in a previous show, if you can't withstand a 40% fall in an asset class, don't be in it, because you're going to come out at the wrong time. So as I said, Australian equities went down 36%. If you were terrified by that and came out at the bottom, you've then missed the 23% bounce that we've had.
Yeah.
So there's some big lessons here, lessons in resilience, and just lessons in life as well. Be grateful to live in Australia.
Yep.
We've had that. You pay high tax and people complain about that, but what a great support mechanism it brings out at times like this.
Absolutely. Yeah. I think it's brought back some national pride, actually.
Yeah, no, I think it has. So look, it's tough. It's really tough, but there is some silver linings. Having dinner with your family every night and spending a bit more time at home. I mean, they talk about that, and it's a thing I've heard a lot of people talk about when I'm talking to clients in business. So yeah, let's be grateful for the things that we have, but some definite big lessons going forward about how to manage your money and your life.
Okay, well, we'll wait and see what happens. But once again, as always, thanks for joining me.
Thanks, Vanessa.
Want to help your clients learn how to change their thinking around money? Download our ebook, Living for Today Without Costing Tomorrow. Next time, we meet Kate and Greg, investors with a retirement goal of $5 million. But have they actually thought through their plan?